Question. Who's better at monetizing communities? The place where you get to talk about stuff or the place where you get to actually do stuff? On the one hand, we have Reddit, the internet's famous dumpster fire of opinions, and on the other, we have Grindr, the most effective location-based network since the invention of, well, GPS. They're both trying to turn human interaction into cash. But which one comes out on top and which one does it better? Let's dive into it. Here's the thing. Reddit and Grindr don't make any content themselves. We do. The product is the people. Reddit gives you arguments, life-changing cat pictures, where Grindr gives you a slightly different type of connection. But both face the same business problem. How do you turn human interaction into cash without making people hate you? We believe that when looking at a company, you need to ask yourself 3 basic questions. Is this a great business? Can we buy it for a great price? And can we reliably predict it for the future? Now, our software does a lot of the heavy lifting for you already, so these 3 questions will already be answered for you, but don't take them for granted. Do your own research, check to see if you agree or if you can find some hidden value here. Now, when looking at Reddit, it IPO'd around the beginning of 2024, and since then it's grown by 300%. That's an amazing growth. But what do they actually do? How do they monetize their community? Now, to find this out, we use our due diligence. This is done by our AI agent who looks at all the previous earnings transcripts and filters all the necessary and important information for you into an easy to understand and simple to read summary. And as we can see, their business model is based on user engagement and advertising revenue. They earn money through ads and premium services. They have a competitive advantage, strong community focus, which fosters user loyalty. And their advertising revenue actually grew 74% year over year to $560 million US dollars, or 549 million US dollars, showing robust demand. And the actual active advertiser count increased by over 75%. They've managed to grow their amount of active advertisers by 75%. And indeed, this does boast a great trust in their platform from the advertisement side. And they also have an impressive compounding momentum. Revenue surged to $585 million, a 68% increase year over year. Daily active users grew by 20%, showing that more people are engaging with the platform. Their adjusted EBITDA margin hit 40%, indicating efficient operations. That's great. Now, if we look at their future expectations, management aims to enhance user experience and broaden their user base. They plan to diversify traffic sources and scale monetization. Their focus on international expansion and improved AI tools for community engagement shows a commitment to future growth. Now, if we take the 3 highlights, ad revenue growth of 74% suggests strong advertiser interest. Daily active users increased by 20%, indicating a grower user base, and management's focus on internationalization and user experience may drive future growth. These numbers are amazing, but I think the key takeaway is their business model relies heavily on advertisers and users using their service. And I think this is very key to understand. They make money from advertising on their current user base. So they want users on their platform and want a high user activity. We've actually seen growing user count, user activity, so that's great. And then they can use their user activity to sell that to advertisers. I always find it a little strange to advertise on Reddit because I think it's a platform where people are there to argue. They argue about electric vehicles, about skincare, about stocks, and making stupid bets on Wall Street bets. And in the midst of that, you're going to run an ad. It's like running an ad in a bar fight, but apparently it's working for them. Now, more importantly, when looking at a business like this, and if you want to decide whether it's a great business or not, you want to go one step deeper and look at their actual metrics. Now, we have looked at their business model, but let's look at what's actually happening behind the curtains. We want to see what they're doing. If we look at their revenue growth, absolutely explosive. 60% year-on-year change. Great. 5-year trend is also hovering around 60%. You can see those stats here. If we look at their net income, that's not looking too great. In 2020, they were negative 60 million, and in 2024, they did a negative almost 500 million US dollars, which is a massive decrease in net income. Now, if we look at their free cash flow, you can see that that's quite contradicting. It is growing. Even though their net income is negative and on a declining trend, they've managed to increase their free cash flow. And I would believe that this most likely comes from them handing out more shares and receiving cash based on selling more stock. And we can quickly check that by looking at their shares outstanding. And you can see that they're increasing the amount of shares by roughly 10%. That's a massive number. And that means for you as a stockholder or a stock owner, you're being diluted by an absolutely massive amount. In my book, that's a big no-no, and I would like to see them reverse this trend. And if we look at their cash to debt, that's actually really solid, really healthy. Ideally, you want to keep a ratio above 1. A ratio above 1 makes the company very, very liquid. They have a lot of cash on hand, which they can spend back in your own business and actually fund their future growth. And with this amount of cash, they can keep funding their growth. But over the long term, I would like to see them stop handing out shares and actually buying some of those back if possible. What else is interesting to look at? I think their operating cash flow is doing quite well. Again, if we look at everything cash related, most of it is quite a big amount of it's being generated by the revenue, but they're spending more than they make. And to make up for the difference, they need to sell their shares. Right now, looking at the numbers, their business model is not yet sustainable. And I don't really see how they can monetize the platform even more. I think Reddit is a great place to be right now. More ads is going to turn off users. Paying more for premium, I don't think a lot of users are interested in Reddit premium accounts. So I have my doubts when looking at the business, the sustainability of the business, and their spending is out of control. They need to become way more efficient, become way more stable, and become way more sustainable. There's still a lot of work to be done on Reddit for them to become a great business. So far, it's not a great business. Not yet. Now, next up, let's take a closer look at Grindr and what do they do. Let's look at their max price chart. They've actually IPO'd at the end of 2022. That's the massive peak you see there. Then they dropped off by quite a big amount, but they've been on a steady rise ever since. And they've actually done well all time, 30% growth, about half of what Reddit did in percentages, but very good growth numbers. Now, if we look at the 3 questions again, as looked at by our AI model, once again, our AI model uses validated third-party data that we buy in. Then we have it check all that data the same way Warren Buffett would check this business and see if all or any of the 3 questions are passed. Now, once again, for Grindr, none of them are passed, but let's take a closer look and see if we agree. We have the same summary. If you want to read it, you can go over to marketdaddy.ai and get a free account. Try it out yourself for 7 days. If you like it, we believe you will, you can subscribe. If we look at the highlights, their revenue is on a solid upward trend with 30% increase last quarter. Again, great numbers, about half of what Reddit did if we look at it percentage-wise, but great growth. They have a loyal user base with 1.3 million paying users and 15.1 million active users. Now, that means that roughly 10% of their users are actually paying users. That's a really high number. And I think this is a key difference when comparing Grindr to Reddit and how they monetize their communities. Reddit wants to have as much user attention, and then they sell that attention to advertisers. Whereas Grindr wants to have users to have the biggest amount of intent. They want the users to be on the platform and actually connect with other people. And they sell a premium subscription to their users, and about 10% of users are apparently interested in it, to increase or give them some premium features and to increase their intent, keep them engaged on the platform for more. And it seems to be working. And I think that's a key difference between Reddit and Grindr. And I also think that this is a more sustainable way to do it, because for Reddit, attention is hard to come by, especially nowadays with TikTok, YouTube. There are so many social media platforms. I think Reddit is becoming less and less attractive as more and more advertisers are advertising on the platform. And that also means they need to be stricter on quality control and what's being actually said on the platform. I think people want to argue there quite a lot, but that means you have to moderate it, especially if you want to be appealing to advertisers. Whereas I think Grindr, they only need to appeal to their core users, and then they can sell to their core users. And that's a very, both what the users want and what Grindr wants are very much aligned. Therefore, I think it's very sustainable. I think their position within the LGBTQ plus community is also, they're the king, absolute king there, and I don't think they can be, their place on top cannot be taken very easily, but intended. If we look at what management is focused on, innovative features, share buybacks, we like to see those, indicating confidence in future growth. Now, once again, let's take a look behind the curtains. All right, if we take a look behind the curtains, or under the bed sheets, we see amazing revenue growth, again declining net income, very much the same story as what Reddit has. Again, positive free cash flow. What are they doing with their shares? We actually see they have increased their share count by quite a lot as well. Yeah, since 2019, so this also includes their IPO. The same was true for Reddit. Year on year, they only grew by 1%, so they're still growing, less than Reddit, but still handing out shares. Cash to debt is a lot less healthy than what Reddit has. They have a lot less cash, so they need to be profitable sooner, or they need to take on more debt, which is a bigger risk. If you look at their growth and their continuation of their growth, it's a little bit less secure from their liquidity and cash perspective than what Reddit is up to. They have way more cash. From a shares perspective, they're handing out less shares, but they're still handing out shares. Let's see, can we find something else? Operating cash flow is looking okay. They have a positive operating margin and a positive free cash flow margin. That's great to see. So they're already a profitable business. If they can keep their spending in check, and the return on invested capital is also negative. There's a big dip here. I'm not sure why that is. I'm inclined to be a little bit more positive on what Grindr is doing from a business perspective than what we saw at Reddit, but I wouldn't call this great. I think they're still heavily reliant on growth. Their net income is still negative, so they're apparently spending more cash than they make, even though they have a positive operating margin and a positive free cash flow margin. It must be because they're handing out more shares and they're increasing their cash position by doing this. But a great business, this is not. Next up, we're going to look at the most interesting question. What's it worth? Can we buy it for a great price? And we're going to start out with Reddit. And we're going to be using our own valuation lab. You can use it yourself over at www.marketdaddy.ai. You can sign up for free. You can use it for any and every stock that you own, want to own, or have owned. You can fill in your own numbers. And the way it works is you have three different scenarios. You have the best case, the base case, and the worst case. And you can fill a certain set of parameters in there yourself. And then you get a blended value based on all the scenarios of what it could be worth, or what's the value right now based on the 10-year projected growth of the company. As standard, the current business performance is filled in, and based on that business performance stretch over the next 10 years, you see for Reddit a massive upside potential. Off the charts, completely off the charts. But the reason why this is the case is because they are currently doing 60% year-on-year revenue growth. 60% is not sustainable for the next 10 years. So we're going to alter the scenarios. Now, little tip, if you need a shortcut, you can use any of these three scenarios already predefined and see what it's actually worth. But we're going to fill in our own numbers. Now, for the best case, if it keeps growing for 25% year on year for the next 10 years, I would be very happy, and I would be willing to pay 35 exit multiple. Now, I'm always looking at a 15% return, regardless of the scenario. Even in the worst case, I would want to earn 50% of my investment, so that's why I'm putting it there. But you can play around with your desired return if you're a little bit more defensive, or you're looking for a little bit of a higher upside if you think it's a more risky investment. Now, revenue growth for the base case, I think if they manage to do 15%, that's great for 10-year averages. And I would even be willing to pay a 25 exit multiple for that, which is way above market average. Market average is around a PE of 15. But if they grow with 15% year on year for the next 10 years, it would make them one of the biggest social media platforms out there, and therefore justified. Now, if we look at the downside, let's say they only manage to grow for, let's even say 5%. Then we're going to do an exit multiple of 10 and still a desired return of 15. Now, this is a really, 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 really bad case. 5% growth year on year over the next 10 years. They grow with inflation, so it's almost a 0% growth. And therefore, the PE would be below market average of 15 and a PE of 10. And if we put all these scenarios together, we get our blended value of $86, which is a downside compared to what's it worth now. And what does this tell you? It tells you that the value for Reddit, or that the value based on the future projected growth based on your scenarios, is that means the business is currently worth $86 if it manages to do what you tell it to do in those scenarios. The current price is a lot higher than the value, and therefore it's overpriced and not worth your cash. Now, if we look at all the individual scenarios, all of them end up below what it's worth today, except for the best case scenario, which only provides you a relative small margin of safety. And margin of safety, in my mind, is difference between current price and your value. And you want it to be as big as possible. That gives you the highest amount of margin of safety. But right now, we can't buy Reddit for a great price. Now let's get back on the grind and answer the same question for Grindr. We're going to go to our valuation lab again. And based on what the business is doing today, they're worth minus 1 cent. Already not looking too great. But let's fill in our own scenarios. 3% revenue growth year on year. No, let's up that. Let's say they manage to do 20%. We would be willing to pay P of 20, which is above market average. 20% is definitely above market average growth. Let's say the base case, they manage to do 15, and let's do 15 here and 15 here. And let's keep this as is, but lower the exit multiple to 10 and still increase the retired return to 15. If we look at what it's worth then, it's actually relatively fair valued right now. There is, I think it's worth, based on my scenarios, the value is a little lower than what you're paying today, but it's relatively in line. 15%, no, that's actually too big. But based on the best case scenario, there is quite a big difference. So if you do believe that this is very likely for them to happen, 20% year-on-year growth for the next 10 years, then you're looking at a great upside potential. But based on all these scenarios, it is currently overpriced. So can you buy Can you buy Grindr for a great price? Currently, no. Now, we've looked at both Reddit and Grindr from a business perspective. They're both not great businesses. We can't buy them at great prices, but maybe we can reliably predict them for the future. And I think if we look at Reddit, we talked about this already a little bit. I think their growth trajectory is looking great, but they are really focused on user attention. And they need to sell that attention to advertisers in order for them to make money. Currently, they're not yet profitable, so they need to manage to keep their spending in line in order to turn that income in actual cash. Right now, that's not happening. For Grindr, they're focused on selling premium subscriptions to their loyal customer base. I think their customer base is extremely loyal. They're already at the peak of the LGBTQ plus community, and they only need to increase the amount of premium subscriptions that they can sell. But still, they also need to become a more sustainable business. And both have a significant cash problem because they need to generate more cash in order for them to keep growing. This also makes them really hard to predict. So I would say both are very hard to predict. But in my mind, I would eke out Grindr as the winner of the entire Reddit versus Grindr debate. Now, if you want to dig into the numbers yourself, head over to marketdaddy.ai. We've built the platform basically for retail investors like you and me. We've built it on the philosophy of value investors like Warren Buffett, like Charlie Munger. Those are the best investors in the world, and we've used all their knowledge out there to create the best and easiest to use platform for you. You can check it out for free. You can try it out for 7 days. If you like it, you can get a subscription. We'll be looking at Visa versus MasterCard, the cashless kings, in the next video. So stay subscribed and see you in the next one. Thanks for watching.